Hello guys, welcome to Traders Therapy Session. I'm your host KRO. In today's video guys, we will be talking about the models that we'll be trading. After you make sure that you have learned the previous video in order for you to land in where we are at this point, at this moment. Guys, from this video I'll be teaching two models. Then I will edit up with the third one, but the third one it's an umbrella of everything else, which is a market maker model. But anything that you need, it's here, and everything that occurs here still occurs on the market maker model. Without wasting any time, guys, let's just get into today's video. The power of three and breakers. Why do I say power of three and breakers? Because they occur hand in hand. In most cases, you find power of three and a breaker at the same place, area at the same time. But sometimes breakers likes to isolate themselves and be out there. But most definitely, 70% of the times you will find the breakers in power of three. So we are searching deep now. Make sure that you understand everything that we taught before. Let's move on. AMD, of which is a power of three, stands for accumulation, manipulation, and distribution. So what you want to see on the market, and let me emphasize this even further, before you try to do anything else, try to learn these models, there's something that you need to take into consideration, of which is the time. Time, guys. This thing, without putting time into it, they are useless. You will see them not working. Please do not forget time. Time, and time, guys. Time of trading, time of looking at these things. When do you want to see these things happen? And you will see with the video after this one, I will show you the importance of time, and I will focus on one session, of which is New York kill zone. I will show you the importance of that, and then how to look at the certain things at a certain time. Okay guys, without wasting any time, let's just get into the video. AMD stands for accumulation, manipulation, and distribution, of which market, before you trade, you have three phases of market that will happen. You will have this phase one, of which is accumulation. That's when you will see the market consolidates. See certain consolidation there. With that consolidation, you will see the breakout. Here it's a sell example. You will see a breakout on the upside to trap or to take the stop loss. It does two things. Remember, you were selling here, you sold here, you saw a double top, you sell, put a stop loss above. So this is the reason why it is coming for. This is coming. It is coming for your stop loss, or it will break out, and then the breakout traders will do what? Will start to buy, because if it's break out of consolidation, put their stop loss maybe around here or wherever. But eventually, it will price will come, or the market makers will come for your stops, either way. So we want to see accumulation. As we approach the time to trade, we want to see manipulation. After manipulation occurs, market structure shift, the retracement, of which this I will explain even better. Then the price went back down. This whole leg, it will be your distribution leg. So you want to trade the distribution. Wait for accumulation and manipulation, then trade the last part. Patience and patience. Let's look at the buy model. Accumulation, manipulation, price will manipulate for can you see the strong support or double bottom right here? Price will want to get to those stop loss. Trust me, market makers will want to get to those stop loss. And then after manipulation, then you see the distribution to your buyers. Remember guys, these things are useless if you don't have a higher time frame buyers. You must have a higher time frame buyers, and you must have a specific place to see. Let me go back to, sorry guys. Remember, these things, you want to see these models here. This is your higher time frame. This is where you want to see those power of 3 and breakers. Here, it's where you want to see them. Guys, here, it's where you want to see them. If you can fail to do this, you are going to have frustrations. Here, that's where you want to see those models on your lower time frame, of which it will be your 5 minutes, 4 minutes, 3, up to 1 minute. Sorry for that, guys. I just had to emphasize this. Then you will see your support. It means, guys, the price was moving high. As it moves back, it will create certain thing. Then you want to see, you want to contribute, you want to participate, I mean to say, on this distribution leg. That will be the power of 3. Accumulation, manipulation, and distribution. You want to see this pattern. After seeing the manipulation, you want to participate, looking to take out the lows, looking to take out the highs. Let's look at the breaker for sell. Breaker can come out of AMD, or it can come in individually. You need to note this thing down, guys. Breaker can come with AMD, power of 3, or it can come individually as a swing high for price to reverse. So it will, we will have a high, or you will have a high. What I like about this, most of people will argue the highs and the lows, but if you are correct, those things, they will sync and work together. Then after having your high, you have the high, you have the higher high. Then you have the displacement, that the market structure shift. You can call this a market structure shift, or you can call this a market structure shift. You are still correct, by the way. See, I want you to take part of this distribution leg, this part right here. This part is not distribution, but we call it a displacement. A leg that disrespected the structure, that broke the structure, is the reason why it's market structure shift. That caused the market structure shift. And it comes with impulse. You will see the legs. You will see the candles that are formed during this. That takes out this. Then you do not want to come in with the what is this? You don't want to come in with the displacement leg. You want to come in at the retracement of displacement. Wow, that's 10. Retracement of displacement. You need to find your fair value gap at your displacement leg. Guys, I'm sharing this. Take notes of that. It's very important, this one. Your fair value gap, usually the one that you enter the price with. Know this one whenever you get it wrong. Whatever the fair value gap that you enter the price with, it should be the fair value gap from the displacement leg. You should find your fair value gap from the displacement leg, I mean to say. And as you go back, you will find maybe an order block that comes with it. Then this model, as it takes back, as you enter the retracement of the displacement, you enter at the fair value gap, and then you will find, because we are going down, maybe you will find, why did I say there's a breaker right here? Oh, I've edited this, but I forgot to bring this closer. Oh, I was utilizing this, I guess. Then from that, you will find, here you're supposed to find candle or candles. Oh, it's a breaker because of this. I don't know stops. Why did I put the stops? As you can see, this was the copy. Forget about this, guys. Forget about this, please. This is a breaker. You find the candle or the candles. Is the reason why I was frustrated. You find the candle or the candles. Bearish ones. The black ones. Because before the establishment of this, those candles, they form a breaker. Those candles range, they form a breaker. That is important because that's where you want to enter and put your stop loss. You put your stop loss above the breaker. And then you need to find a fair value gap within the breaker. That's a high probability trade. Within the breaker, there should be a fair value gap. That fair value gap in the breaker, either if the fair value gap come first, let's say for example like this one, there's a breaker here, orange side. If the fair value gap comes before breaker but it overlaps with the fair value with the breaker, utilize your entry as a fair value gap. Don't want to be perfect because you will miss a lot of trades, and then your stop loss should always go above the breaker. Then your target should be the first low. Remember, I talked about the fair value gap. The first target should be this one, or you can target whatever is it that you were focusing on the higher time frame. But remember, the closest hanging fruit, and 1:2, 1:3, guys, it's viable here. Then let's explain the breaker for buy. Breaker for buy, you had the market going down, lower lows. Instead of creating a lower high to create another lower low, the market breaks structure right here. Then it comes back. This leg is this one, but I want you to focus on this part only, of which we call it a displacement high. This displacement, guys, we don't trade the displacement. You want to see it. As market retraces to a displacement, what are you looking for? Because you are moving high, you want to see what? At this point, you want to utilize what? At this point, you want to utilize the last bullish candle or candles, right? Before this move was established right here. Then you will call that one what? You will call those candles, what? You will call those candles a breaker. Maybe from here to here, that will be your breaker. As it comes to the breaker, whatever comes first, this should be your entry, stop loss here. Whatever comes first between, and then it should have a fair value gap. Maybe some sort of a order block. It's even better. Without wasting any time, guys, we had a long run here. Let me go to the, what is this? Let me go to December and show you how December performed. I will start it from November, the end, maybe 2 days before November ends there, because that's where it starts, and then up to before Christmas, and then you will see maybe 20 trades. It's about 20 trades, yes. You will see how they performed. I will first show you the sheet, and then we'll see the sheet. We'll interpret the sheet together. After interpreting the sheet together, then we'll go to the trades themselves. Guys, you better be prepared. You better be prepared, and you better take notes on these videos as we go to those videos, because they have to make sense. After me having to explain that, they have to make sense. What is left is for you to go to your charts and see if whatever is it that I was saying is true, and see if you can perform like that. And then the last part that is left, it will be your participation on a live market. And guys, I'm not encouraging anyone to utilize their real money. We will utilize this using the paper trade money. You can mock us and say whatsoever it is, but we're protecting ourselves. I'm protecting myself because I'm not a financial advisor, and then I do not have to give anyone financial advice. What I'm doing here is to show you how the algorithm from the market happens. Going further with this, guys, that will be up to you. Without wasting any time, let me see you on the next video.